What's up everyone, welcome to a new video. As you know already, in this channel you can find a lot of information about how I trade and some concepts about smart money, which are some concepts that I have inside of my strategy. Now, as I said already in many other videos or on my Instagram, if you follow me already, and if you don't, make sure to go follow me for also daily tips and to actually follow what I'm doing and my entries and my trades and so on. As I say many times, smart money is a great tool. It has some great concepts, but in my opinion, it is not something that makes you profitable. As you know, right now, it is very, very popular. A lot of traders are using smart money, including myself, keep in mind, but still the 90%, so the majority, 90% of traders, or maybe also 95% of traders are still losing money, as I say many times. And you might wonder why. Why everyone thinks that smart money makes a person profitable, but they still lose money. The reason why is because a system with an edge on the market is missing. Smart money has great concepts. They can be applied, they make you understand how the market moves. But if you don't have a system that is proven to work over time and is proven to give you that extra edge in the market, then it is not enough to actually be profitable. Of course, mindset and psychology plays a huge role, and you might argue that 90% of traders also lose because of that, and I agree that it plays a role inside of the overall 90% of traders, but this is not the only thing. Keep in mind that smart money needs to be contextualized inside of your strategy. With that being said, I hope that you will like this video. Make sure to subscribe, because I will drop 1 or 2 free videos with free education here on my YouTube every single week. And if you want to join my course for some extra education and to actually learn how I trade and to follow my setups and my entries, then the links are here below. I'll see you in the video. Great, let's get started. So I usually do these live tradings with my XL members. I'm right here in the XL office. If you don't know, this is the office that I bought recently. We do the podcast here, we trade. I have other members of the XL team, and we also have other traders coming to see us. It is included in the FTMO Funding Accelerated program. Also this weekend, I will go to Madrid with the team, and I will meet some people that are my students. So if you are in Madrid, I'll meet you there. The audio is great. Thank you so much. Perfect. I am recording also this session, so yes, you will get the recording after. Maybe if you are a student, for sure you'll get the recording. Now, during the live tradings, I go over the charts that I have, and also in these live tradings, since a lot of people, this is the first time I do it open to the public. Usually I do it only for XL members. You can send your chart, and I will take a look at your chart. I will review it. I will tell you what you're doing good, what you're doing wrong. And after that, we just continue from there, basically. So with that being said, I want to go over a trade that I took today and that I sent to the signal channel, just as proof. People might not believe it, but here we have the signal channel. And yes, I did send the trade in the signal channel on your GBP. With a 4.2 restored ratio profit. Now, let's go over the trade, because it was a very important setup. Keep in mind that if you learn how to trade these type of setups, you can make money every week of the year without any problem. These are always the same setups that you need to learn in order to actually profit from the market. So, first of all, we had this liquidity here, this liquidity of the low. We went for external liquidity, and this was the first thing that I wanted to see, just liquidity being taken, because I don't want to trade if liquidity is not taken. So we took liquidity below this previous low, and at that point I went on lower time frames. I knew that I was looking for buys. So at what daily model did I want to look at? I wanted to see an intraday trade, very quick trade, for quick buys for some good risk-reward ratio below this liquidity. So if we didn't go below this liquidity, I didn't want any trade. Now, another thing that I want for trading some intraday setups is that we go below the Asian range. This applies to only few pairs, not all of them, but EuroGP is one of these pairs. So below Asian range liquidity is the first requirement. We went below it right here. Second requirement is that we went below this low liquidity right here. Actually, let me fix it slightly right here. Now, we didn't grab this liquidity for a while. We were just going downtrend, 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 downtrend with these supplies being respected. Now, of course, you can trade these supplies if you want. That wasn't my plan, but of course, you can trade the supply. You can trade this quick trade right here that on the 3 minutes is more clear. But that wasn't my plan, to be honest. I was looking for buys. So this could have been an option, but I don't have a statistic edge on this type of trades. And therefore I was waiting for my setup that I usually trade. Now, we were on this downtrend until we took this external range liquidity. At this point, I knew that it was okay for me to look for buys. I went on the 1 minute to actually check it out. I went on the 1 minute. And if you are an Excel student and you're seeing volumes, these are volumes that I've been using for the past month. I've been backtesting them. I will upload the new lesson about these volumes for extra confluence for entries. These are not necessary, but they have been helping me with more confluence. So I will upload it. So here we can see that we have, after taking external range liquidity, we have this breaker structure, which is not enough in order to take a trade. But most importantly, we close above these right here. And I believe also here, yes. So we break multiple highs. The more we break, the better it is. We break all of these and we come back down. Now, as we were coming back down, I want to trade only the extreme demand because I don't want to trade any other area that is not really good. Plus, we had this imbalance that was left behind here. Therefore, I took this demand as point of reference. I took this demand as point of reference and I was looking for an entry. Now, you can just take a risky entry from here, but that was not what I was looking for. What I was looking for was a good, very good confirmation that we could have taken the trade. And right here at this point, at this engulfing candle, I was already starting to get interested. Now, if that's not what you want to do, the best possible option is that we break this supply. As we are coming back down, we want a confirmation here for just for educational purposes. We go for, after going for external liquidity right here, we go for the internal one, which was right here. I was not really interested in that. It's not that important to know this, but can be a good confluence if you know about this stuff. Internal and external liquidity in every move is necessary. We reached the area, so we reached this demand that was created here. And what I wanted to see was this engulfing candle with good volumes. This for me is considered a good volume. I will not tell right here how the volumes are used because that's available only for Excel students in the Excel community. I will drop that lesson, but this was the candle that confirmed my bias and we could have just taken the entry from there. Now, took the entry and the rest is history. And you know the rest, we booked a 4.2 risk-reward ratio and we closed the trade, closing the week with very good results. Absolutely sniped the exit this morning. Yes, and what's also very important is know when to close. Now, let me show you. 1 second. Perfect. So let me show you, because we closed right here. So I also teach you how I manage the trade. So we took the trade from around this area, the stop loss below this area. Yes, take profit was a little bit higher. But anyway, at the beginning, I was looking for higher risk-reward ratio. What happened is that I saw the price starting to accumulate right here. And I knew exactly that the first confirmation could have been a fake confirmation. So a lot of people would have traded this change of character, break to the upside, break to the downside, and they were looking for sells. I knew that was not what was going to happen for sure. And I knew that the protected low was this low. So this was the demanding control. In fact, we moved in the signal channel, we moved stop loss below this low. Right here, we moved stop loss. Oh, where is it? I don't know. We just moved stop loss right here. Now we respected the demand. We continued going higher. You could have, I actually did take another entry at this point. Once we broke to the upside, retested with this candle, I took a small entry. I have to be honest, I didn't send this trade because we already had this one running for the signal members, and I was targeting a quick 3 risk-reward ratio, and I took that trade and closed it. But as soon as we broke this high and I saw price pushing with these candles right here, these are the usual candles that push after a fake change of character. This is usually the last push before reversing. We closed exactly right here. I believe actually here, to be honest, closed right here, and right after we went to the downside. Now, this was a sniper entry, sniper exit. This is what's really important, not knowing only when to enter, but also knowing when to exit.